Washington's economic paradox. Exports thrive amidst a slowing economy. In the heart of Seattle, state officials grapple with a perplexing economic landscape. Despite a sluggish growth rate and a tepid employment market, Washington's exports are on the rise. This unexpected development has left many scratching their heads and seeking answers. State legislators have delved into the intricacies of the economic forecast, trying to make sense of the recent report. While total state revenues are projected to increase over the next biennium, the pace of growth has noticeably decelerated. David Reich, the executive director and chief economist for the Washington Economic and Revenue Forecast Council, sheds light on this phenomenon. We're witnessing a slower growth trajectory compared to historical trends, Reich explains. Employment growth, for instance, has only reached 0.3% this year, a significant departure from our usual pace. But here's where it gets controversial. The ongoing government shutdown, now in its third week, is described by Reich as a relatively modest economic event. However, the impact of this shutdown could potentially escalate, especially if it persists. Additionally, the inflationary effects of tariffs have been milder than anticipated, likely due to a combination of timing, market adjustments, and suppliers absorbing costs to shield consumers. We've observed lower price impacts than expected, Reich notes. These effects are expected to materialize, but perhaps not as drastically, and they may be spread out over the course of 2026. Over 75% of the state's revenue stems from three primary taxes: retail sales tax, business and occupation tax, and property tax. Reich attributes the lower-than-expected revenue to a dip in taxable sales. However, not all sectors are experiencing a slowdown. Imports and exports, particularly in transportation equipment, have seen a 7% increase year-to-date. This surge can be attributed to new agreements made by Boeing to sell aircraft to other countries. Agriculture exports are also thriving. In contrast, other sectors within this category had experienced a 10% decline during the first half of the year. This trend has been ongoing for over a year, suggesting it's not solely driven by tariffs. It's likely a response to shifts in global markets, Reich clarifies. While the September report paints a picture of slow growth, Reich remains optimistic about the GDP's prospects for the upcoming month. He believes it will have an overall positive impact. Our baseline scenario does not point towards a recession. We anticipate continued growth, albeit at a slower pace, he asserts. Reich predicts a period of higher inflation over the next few years, followed by a return to a more predictable economic environment in 2027. This projection is largely attributed to the gradual impact of tariffs on the system. Washington's economic forecast for the coming months will be unveiled in November, offering further insights into this intriguing economic narrative. What are your thoughts on Washington's economic outlook? Do you agree with Reich's assessment? Feel free to share your insights and engage in a thought-provoking discussion in the comments below.